Hey, Mariette.
We just finished a webinar that we've been waiting to share with our community all year, and it was the Year-End Readiness webinar. We wanted to focus on closing the year strong with tax-ready books, but then we decided to bring in two separate technologies that both of our communities have been asking about. So I want to share that I covered the QuickBooks side of year-end, but you covered FreshBooks. So why was it important for you to bring this to our community?
Yeah, I think a lot of people are adopting this software. A lot of accountants are curious about it. So, and I specialize in it. It's all I do every day. And so I have a year-end checklist that I was able to refine and debut. It wasn't its debut, but I updated it for this year and shared it. I think it's going to be really useful for anyone who's got their hands on that software, whether it's the business owner or the accountant, and they'll know exactly what to go through. So then they can, take a backwards look at 2024 and use that accurate data to propel into 2025.
Absolutely. And I loved your checklist. You were the inspiration of making this the ultimate checklist webinar. But of course, we gave tons of more resources, which we'll also give you here on the video below. But most importantly, you also did a call out and you told me when we close this webinar, I don't want to just tell them about FreshBooks and QuickBooks. I want them to elevate their business. So just give us a teaser on why that was important to close like that in this webinar.
Yeah, I think in the webinar I ended up, closing with, the truth will set you free. And I see so many business owners who don't have accurate books. Their books are not truthful. Not that they're being malicious, but they're just not accurate. And so by helping, how we did today, by helping them know what it means to have accurate books, they'll be able to use their data to propel their business forward instead of kind of bumbling along in an uncertain way. They'll know, even if the truth isn't pretty, they'll at least know the truth so they can make decisions strategically based on accurate data, and that's just going to be put them in a really powerful position where they feel in control instead of feeling out of control.
I love that. And yes, not only the truth set you free, but both of us agree that tax ready book sets
Yes.
us free.
Yes. Yes.
Thank you to everyone that joined our webinar. Again, resources will be provided to you, but most of all, I want to say a big thanks to Kate. We did it, and we're so excited to provide you more collaborative magic in 2025.
Exactly.
Bye, everyone.
Bye.
So let's start with the small business accounting workflow. What is the small business accounting workflow? The small business accounting workflow is the opportunity for a small business and an accounting professional to create a simple 3-step process, aka also known as a workflow, that guides a business on how to go from books to taxes. Because that's what tax-ready books are. They are the full workflow, the full process, all of the financial data and insights that took a business's books, financial data, and moved them all the way to being able to prepare for taxes. Even if it's not tax time, books should always be tax ready. Now, why should books always be tax ready? Because tax ready books are rock solid books. They're rock solid financial statements that complete the entire journey. The journey from accurate bookkeeping to that deeper financial accounting analysis, and then being able to allow the accounting partner and the business owner to sit on the table and have the conversations that count. That only can happen if the books are rock solid and tax ready. And when the books are tax ready, guess what else could happen? You can join the next path into closing your books, which is beginning the year-end readiness process. So the journey starts again with the small business owner, the solopreneur, the micro enterprise sitting down with the accounting professional and saying, okay, let's choose our roles, let's choose our responsibilities, and who's going to complete the small business accounting workflow. The reason why that's so important is because we want to make sure all the steps of the accounting workflow are completed to be able to reach the year-end readiness process. So what does that look like? Well, the small business accounting workflow is super simple. That's why I loved when I designed it. When I started teaching my accounting clients over a decade ago, when I would serve them, I'd say, this is all we need to do. Now, of course, when I say all we need to do, I know there's a lot behind it, but I wanted to keep it very simple. I wanted to provide a framework that my entrepreneur and me and an accounting partner, we can go ahead and speak the same language and say, these are the 3 steps that need to be done. We need to complete all of the accounting tasks. We need to prepare the financial statements. And then we need to report this information on the tax returns. That's how I'm able to take you from books to taxes. Now, a more visual of this workflow would be, okay, so what do you mean by completing all the tasks? Well, when I needed to start teaching how to complete all the accounting tasks, when I not only was serving small business owners, but when I began to teach accounting professionals over 10 years ago, that's when I designed the end-to-end accounting lifecycle. And the end-to-end accounting lifecycle is my opportunity to truly teach all the accounting tasks that need to be done, both monthly, quarterly, and annually. And that's inside of the end-to-end accounting lifecycle. Now, for a small business owner, I didn't have to go as much in depth, but I did need them to understand the principles of tax and the workflows that are needed to complete year-round accounting tasks. Why? Because that's how they're going to go ahead and start producing and preparing tax-ready books. That's how they get to the point where they're creating a process in their business, and an accounting partner is creating a process alongside their business client, so that way they can be accurately preparing financial statements. And beautifully, by leveraging technology, it's really happening in the background. So if you know that it's happening and the right data is getting created and the correct and accurate data is getting populated in the financial statements, then guess what? The process to report on taxes is seamless. You took all of that pressure and stress off of tax time because everything is ready to start moving the data from the financial statements to the taxes. And that's how you take a business from books to taxes. That's the full small business accounting workflow. So now that we're assuming that we all have some sort of workflow like that, whether we're a business owner and we're doing it in our business, or we are an accounting partner and we're doing this alongside our clients, so we have tax-ready books, we can go ahead and move into what? The next step, which is year-end readiness. So let's go ahead and take a deeper look at the year-end readiness process. And remember, if you have any questions at all, go into the Q&A, ask your questions. If you have anything that's come up for you at all at this point, go ahead and put it in the chat. We'll stay engaged this whole time. So let's get into the year-end readiness process. What is the year-end readiness process? The year-end readiness process is the comprehensive year-end closing of a business's tax-ready books. Now, this is a really, in-depth definition that I've created because I want you to see every single part of the year-end process. It's a comprehensive year-end closing. So we're closing the books, but we're making sure we're covering all our bases, right? That's why it's comprehensive. And we're closing tax-ready books. So we already know that the books are good, that they're clean, that they're right, that they're tax-ready, but we still need to verify and validate that all the transactions are there. Why? Because we want to make sure that this accurate financial data is moving into the tax preparation stage. So that accurate financial data has been reported in preparation of the tax preparation. That's the whole idea here. And the year-end readiness process has an assumption. The assumption is that the year-end readiness process is the end of the tax-ready books process. So you've been completing all of these tasks year-round. You've been completing the small business accounting workflow, completing tasks, preparing financial reports. So that way, when you get to the very last step in the small business accounting workflow, which is reporting taxes, it's just tying up those loose ends, dotting the I's, crossing the T's. That's the assumption for the year-end readiness process. It assumes that accurate financial data and tax-ready books have been maintained year-round. Now, let me pause for a moment. This is not an opportunity to be like, oh my gosh, well, mine are not maintained year-round. I'm not doing this. No, we are not here to shame anyone or make anyone feel like this is what you should be doing. This is awareness right now. So this is the process of being able to seamlessly move into year-end readiness. Excuse me. So if you haven't been doing the tax ready books year round, that's okay too, because now you know you can catch up and then start maintaining it year round. And with that being said, it's a very common assumption. What if this assumption is not correct, that you're doing tax ready books year round? That is very common for many small businesses. For those businesses, especially that haven't previously engaged with a bookkeeper and accounting professional, they need to catch up on their accounting. They need to do an entire year or maybe multiple years of accounting all at once because they didn't know about the tax ready books process. They didn't know about the small business accounting workflow. So it's okay. But let me just tell you, if that's your case, if you need to catch up on accounting, then bring in your whole team. Bring in the business owner, bring in the bookkeeper, bring in the tax professional. Every one of you should be running to that finish line. Every one of you should be on the table making sure that your goal is tax ready books. So let's explore the year-end readiness process and break it down into 2 key stages. So the first stage, 1, is that year-end deep dive accounting review. So you really want to audit proof those books. So what does that mean? You're going to go line by line on your balance sheet and make sure every balance sheet account is reconciled. You're going to line by line on not only your balance sheet, but also on your profit and loss statement, and also make sure that every account, every number, line by line on those 2 key financials makes sense. You're going to drill down possibly on some of your profit and loss accounts and make sure that the information is correct. You may have to do some special profit and loss account reconciliations. For example, if you have contractors or payroll, or you want to do a deeper dive on your sales or your point of sale system, those are those special reconciliations you need to do. And of course, you need to start keeping track of what is common for the industry, what is common for your business versus what's not so common for your business in regard to the expenses you took this year. Then you move on to stage 2, okay? So this is when I say, even if you don't do taxes, you need to be aware of what needs to be done to prepare for taxes. And so when it comes to preparing for taxes, you need to know the ordinary and necessary rule in regards to what expenses are deductible. You want to know the different IRS forms that may be required for you to file for your business. You want to organize your documents ahead of time, like your mileage logs, or if you qualify for the home office deduction, or for assets, depreciation schedules. You want to know the type of taxes that apply to you, right? Income taxes, state taxes, self-employment taxes. You want to also be aware of your own business tax form. Are you a sole proprietor? Are you a partnership? Are you an S corporation? And then, of course, you want to be able to match your books to your tax forms, because regardless if you are preparing the taxes or you're sitting there alongside your accounting professional and looking at them prepare the taxes, you should know how they move the data from your books, your financial statements, to the tax returns. And then lastly, when all is said and done, you want to close those books and protect them for the next year. Again, that is the full ultimate year-end readiness checklist that I have for you, one of our goodies, and you're going to get that at the end. Okay, so guys, we're going to shift. I am turning it over to Kate. Kate's going to come on in, and Kate's going to go ahead and share some of her readiness checklist tips and techniques, or even part of her process in FreshBooks.
We're going to work through this year-end checklist. Let me show you. I got it up right here. Y'all, it's a big old document. It's got a checklist and then followed by a 5-page workbook. You will get this. Be patient. It's the supplemental pages document how to do the checklist items. But for now, just pay attention. I promise that you're going to get all of this information. Any resource that I mentioned will be included in the bonus section. And the roundup of resources is for accounting professionals who are FreshBooks curious, as I call you, because you might not have served clients yet. And it's for the business owners who are using the software. Oh, nope, presentation. We're just going to go through the top 6, y'all. The bottom 3 we have kind of talked about with the general. It's not specific to FreshBooks, so I'm not going to talk about those. And ask any questions you have in the chat. So my first item on my checklist, y'all, is reconcile bank and credit card accounts. My most simple definition of reconciliation is that you get your monthly statement, bank or credit card, and you look at that ending balance and you compare it to a number that you see in FreshBooks. You've got to find that number in FreshBooks that says I got the same amount of cash in my bank that FreshBooks thinks that I have, or the same amount of credit card debt that FreshBooks thinks that I have on that particular day. Usually for checking accounts, it's the last day of the month. Credit cards, it's a random day in the middle of the month. But I can 100% guarantee you that if you're not doing this process, your books are wrong. If you want accurate books, the best tool you have is this bank reconciliation process, because you want all of your business transactions, but only your business transactions, if that makes sense. And you can get errors both ways. So sometimes there can be a glitch in any bookkeeping software, or it could be on your bank side where all the transactions don't get imported. And if y'all want to comment in the chat, if you're a FreshBooks user, if you've ever had transactions not come in. But I've also seen it the opposite way, where there are extra transactions in the books, whether it be from a glitch that's duplicating your import. Maybe you have duplicated invoices. I see that. I see people take pictures of receipts, but not match them to the actual credit card transaction. And so the credit card puts it in, and then your photo app, the photo using the FreshBooks photo app puts it in. So all of those things are things that I see like all the time. And reconciliation is the only way to make sure that things are accurate. It's particularly step 6 in my video. In my checklist, the video is going to tell you how to do this. It's a kind of a whole class into itself, so I'm not going to dive into the details of it. But there are hacks in this video that will help you. It's much more complex, y'all, than clearing out that left side of your FreshBooks accounting tab that y'all probably seen. Just because you clear everything out from that left side does not in any way mean that your books are reconciled, because you have at no point looked at your bank statement and found the number that matches in FreshBooks. So my general tip for all of you is that I hope you've had a great import, and I've hoped that you don't have any duplicates or omissions, and that on December 31st, you can get that December statement, do my steps, and it matches. But if it doesn't, you're just going to go month by month. Don't panic. You do have some, you're just learning this. You'll catch yourself up going month by month, and then continue throughout 2025 on a monthly basis. The next step for FreshBooks users is to confirm that petty cash has a $0 balance. This is a major issue. There's nothing like what FreshBooks calls petty cash. Like at any point in your life, you've never heard of anything like this. No one has ever been taught this concept in accounting school. It doesn't even line up with the dictionary definition of petty cash, which is like, in the old days, someone would like walk to the business secretary and need to run an errand, and the secretary would give them a little cash, and that's what petty cash is, right? That's not what this is. So just throw that idea out of your head. It took me a very long time to really understand what it is, but I'm going to describe it to you as a holding account, maybe a catch-all bucket. Sometimes I use the word a parking lot. So it's where everything that happens in FreshBooks, and I mean everything, goes and sits in petty cash, and it gets stashed there until you either, one, tell FreshBooks what bank account or credit card the transaction happened to. That's the bank reconciliation process. Or two, until you make a journal entry to tell FreshBooks the place that it's supposed to go in the financials. So we want petty cash to have no balance, because we're putting everything that went into petty cash in the right spot. Some common examples of things that are going to populate petty cash are if you make a purchase on a personal card by accident and you type that in, that's going to go to petty cash, and you're going to have to make a journal entry to clear that. If you have a loan and the loan is not going to connect to FreshBooks, so that's going to be an example of something that, you want the loan on the books, but it can't stay in petty cash. So you put the loan in and you have to do another step. The main point is that petty cash must be 0. If you look at this image in this slide, you'll see that it says debit 0, credit 0. That's what you want. And there's one major trick, and that's where the red arrow is pointing, y'all. The trial balance, which is the report where you're going to see the easiest report to see this number. The trial balance has to the start date has to be from what I call the beginning of time, for your FreshBooks account. It has to be a date that precedes any accounting activity in this FreshBooks account. It doesn't even have to be precise. So I typically just go into that field and I just grab like a super old year. You know, sometimes I'm grabbing like 2010. But when I'm working on a client that just started in 2021, I don't care. It's wherever my mouse scrolls to, as long as I'm picking a year that's far back where you're good. Again, this concept is tough. It took me a long time to fully understand it because it's not taught in school. But I'm here to help anyone who needs help comprehending this. Next on the list is that you're going to ensure expenses have consistent merchants and categories. At a minimum, this is what you need for your expenses. I have it circled in the yellow box here. That's your merchant and that's your expense category. Now, there are many other things you can do with many other data fields for expenses. You can tag them to projects. You can add receipts. You can make them billable, but I consider all that stuff like extra, kind of like varsity bookkeeping. They're not required, but merchant and expense category are required. And my philosophy is less is more whenever it comes to expense categories. I think the average FreshBooks user, the business that's a good fit for FreshBooks, probably doesn't need more than about 15 to 20 expense categories. You might feel that you're going to want a lot more than that. But when you have a ton of categories, your brain starts to shut down and you're going to look at your profit and loss and it's just going to be meaningless. It's going to be like white noise. If you've got 50 expense categories, you're not going to be able to start to like use that data to propel your business forward. And remember, for tax purposes, that tax pro is going to shove all these those categories together. They're going to combine some of those categories because we don't have a whole lot of boxes on that tax return, as we just saw. One way I think about it is if you have an expense category that only has maybe between like 1 to 5 transactions in that category, find another category. Or if you have an expense category that has just a tiny amount of money in it, you know, like you're just doing like little tiny percentage of purchases of all of your expenses, that's another clue to say, hey, let's just find another category to put those transactions in. Don't be so granular. A few quick tips on this for FreshBooks users. FreshBooks does have a bulk reclassify tool. It's called Bulk Actions. I've taught many of you how to use that. That is where that button will help you as you are cleaning this up. For year end, you're going to go in and you're like, well, I wasn't consistent with my merchant names, or I wasn't consistent with my categories. Use the bulk reclassify tool, bulk actions tool to change merchants and categories in bulk. It's really helpful. An example would be like if your merchant, you know, if you were kind of sloppy with your merchant classifications, or sometimes FreshBooks tries to name it for you, and FreshBooks isn't consistent, and you've got like a merchant called Amazon, Amazon Prime, and Amazon Kindle, like just make them all Amazon. Okay, so you could use your bulk reclassify for that. And then a big problem I see is a lot of people put their transfers as expenses. So if credit card payments and savings accounts, you know, transfers into savings, not expenses. So make sure that nothing in this expense list is a credit card payment or a transfer. All right, next, run expenses by merchant report to issue 1099s. So we talked about no, we haven't talked about 1099s yet, have we? You're going to issue 1099s. This report, all it's going to do is tell you who you are going to need to potentially issue a 1099 to. But this is the report to do that. A lot of people are asking me for this information. And if you see on this screen, all I've done is you take the expense report, and on the right side, it is grouped by merchant instead of category. And you're going to get this big old list. FreshBooks likes its white space, so it's a very long list. It's not like it doesn't look like a spreadsheet. It looks like a long list. So you can use your eyes to scroll through and look for those merchants that you've paid more than $600 to. Or if you're pretty good with Excel, you can actually export this to Excel and use a pivot table, and it'll bring those sums of who, you know, how much did you pay that particular merchant. You'll notice on this slide that I also say, pray you've never used the bills feature. This is a warning for FreshBooks users. Do not use the bills feature. And that is because as of December 2024, the way that they've built their accounts payable feature that they call bills. It's incompatible with like the rest of FreshBooks. It's incompatible with the rest of the expense section. They split it up. I got my own opinions about that, but for now I'll just say stay away. And you cannot get a list of anything that you made a bill of. So if you, yeah, that's all I'll say about that. Call me if you want more information. Hopefully you're just letting the bank or the credit card pull those transactions in, and FreshBooks users are largely cash basis filers in America. And so, you know, what matters is the day you pay, not the day that the bill was due. So that is how to get that 1099, or what I would say is the report to issue the 1099s. Yeah, and then to file, I use a software called Track 1099. That's one of the ones that's the one I use and recommend. You're going to request W-9s from those people who you've, you know, from the merchants you've paid, and then if they qualify, then you can issue them a 1099 based on the amount of money you've paid them, and your bookkeeping is going to show you. I've paid them, you know, 6 times this year for this amount of money, and that's what's going to go in the 1099. Next, run your accounts aging report to track down delinquent clients, or the 5th item on the list. It's a great time. This is a great time to just sort of take a sneak peek and see what you have outstanding. You'll see in the example on this slide that they have $89,000 of receivables outstanding. If I had clicked on that overdue button, it would shift to say only 6,000 is actually overdue. But all of this money is potentially collectible. Maybe you want it by the year end. Maybe you need it by the year end. This is the list of people who owe you money, and you can start to have a conversation with them. So just use this as a report to figure out your plan for collection. And then I want to use this slide as a chance to let you know that in every single industry, yes, even yours, and you're going to think, no, Kate, not mine, but yes, yours. Some entrepreneur has figured out how to have 0 accounts receivable. They have figured out how to get paid before they do their work. And they're shifting the risk to the client instead of them bearing the risk of that client not paying. And I think it's brilliant. It's how I try to operate my business. And it's something we talk about a lot in my FreshBooks office hours group. And you know, reducing your accounts aging, reducing your accounts receivable is a great way to improve your cash flow. And this year-end process, year-end checklist is a great time to get caught up on people paying you and then think about how you're going to tackle 2025 to maybe not have such many receivables. All right, last step. You have to prepare financial reports for the tax pro. This list that I have here, guys, on this slide, the detail is in my workbook, but I'll just kind of blow through it pretty quickly. You're going to need your P&L report, your expense report by category, and then your general ledger. I suggest all 3 of those in PDF and Excel form for your tax pro. And if you want to provide the balance sheet, you only need to provide the Excel version. The PDF is pointless. As of 2024. Hopefully that'll be fixed soon. But all those are available, and I say your tax pro is going to love you if you give it to them in Excel, and then it's a pretty version if you give it to them in a PDF. So I think both are helpful. You know, putting them in a Google Drive and giving them access to that could be a great way to just give them all of it. And I do want to provide some cautions on this slide. Your tax pro might ask for something called a trial balance report. Tax pros love that report. And because it makes their life a little easier, but do not give it to them if you use FreshBooks. The reason you can't give it to them is because what FreshBooks calls a trial balance is not a trial balance, but your tax pro will assume that it is. And so you can't let them use the report like they would think they're going to be using it. So just don't give it to them. They can do their work without it, if that makes sense. And then another caution is I don't believe that you should give your tax pro access to your FreshBooks account unless they have obtained their FreshBooks accounting certification. If they've taken the training on this software to really get to know it, then you can invite them and they can grab these reports themselves. But if not, you're going to be their only FreshBooks client, and they're going to jump in and think it's QuickBooks, and it's not going to be the same. So just tell them that the training is free. It's only like 3 hours. They get CPE for it, which they need anyway. And then they'll know some of the uniquenesses of FreshBooks, and then give them access. That's my opinion about that. Oh yeah, and if you have a tax pro who is willing and excited about working with FreshBooks, small businesses who use FreshBooks, please connect them with me because my list is long of people who are looking for tax pros. And so I would love to have them as a part of my network to refer people to because I don't do taxes. I'm going to be done for now for my part. I'm going to pass it back to Mariette. I do want to say I'd love to connect with you on LinkedIn and YouTube. I'm going to put those links of mine in the chat after I pass it off to her. And while Mariette is bringing up her slides, y'all, I want to know what YouTube tutorial do you need me to create about FreshBooks? I would love to have that list as I go into 2025 to make sure I'm making the education that y'all need. So Mariette, I'm going to stop share and
Yes.
over to you.
So we already had our lovely Kate cover the checklist for FreshBooks. And again, as she said, you're going to get the FreshBooks as a bonus, the FreshBooks checklist as a bonus. So now let me go ahead and shift gears and let's cover tax ready books. So we're going to cover tax ready books again, everyone. That was the whole reason why I showed you the simple process, because when I started teaching the simple process, the small business accounting workflow, I can add any software with it. So in other words, when you learn the small business accounting workflow, complete the tasks, prepare the financials, report the taxes, which ultimately makes you tax ready year round, it doesn't matter which accounting software you're using. You could even be using a spreadsheet if you want, which I hope you don't, but you can use FreshBooks, you can use QuickBooks. But what I want to show you just in the next few minutes is what it looks like if you are using QuickBooks. So here are tax ready books from start to tax time. So imagine you're starting from scratch. You have nothing at all, and you're going to use that same small business accounting workflow we covered in the very beginning. You're going to complete the accounting tasks. You're going to prepare the financial reports, and you're going to report this information on your taxes. So what does that look like? So let's talk about completing your accounting tasks quickly and accurately using QuickBooks Online. So there's 3 options that you can use to complete your accounting in QuickBooks Online. You can connect the books directly to your bank. You can upload that data into QuickBooks Online, or you can use a PDF statement. Yes, my friends, you can use a PDF bank or credit card statement and transform that statement basically into a convertible file that will allow you to upload it into QuickBooks Online. Now, I have videos for all of this, so I'm not going to go heavy into demo, but I will share some of the areas where you will click through inside of QuickBooks Online. But you will have access to detailed videos on all of these steps. What's really important for you to understand is that you can choose any of these options. You can just connect your banks to QuickBooks Online. You can upload data and also connect your banks to QuickBooks Online. Or let's say you have to do catch-up accounting. Remember, we covered catch-up accounting. So let's say you need to use PDFs for 2 years worth of accounting because the bank is closed, and so you only have PDF statements. So you would use those PDF statements to upload all the data into QuickBooks Online, and then you'd start using a more automated process like connecting the bank. Let's review the steps by each option. So the first one is connecting the bank. So this is the easiest option. So that's why there's only 2 steps. You're going to go into QuickBooks Online. You're going to connect directly into your bank. So you're going to find your credit card or your bank institution, and you're going to click on connect. I mean, that's how easy it is. Of course, it's got bank level security, so you can feel secure about that. And then when the data starts coming in, you're going to categorize that data into the 5 main chart of account types that go to your profit and loss and your balance sheet. And we'll cover those in a minute. Now, why is this so important? Well, it's fast. It minimizes user error. It's an automated approach for you to bring in this data, to auto-categorize this data. And of course, you can even start ditching the shoebox because you can add receipts to those transactions. Number 2 option, upload it into QuickBooks Online. Now, in this case, for example, you need to download the data from the credit card or the bank institution. You could edit it if you like, and that's why the video I have goes through the process of maybe cleaning up the file a little bit and then uploading it back into QuickBooks Online the exact same way that you would do it in the Direct Connect, and I'll show you that in a minute. And then the most important step, again, is to categorize your transactions using the 5 main account types. And then lastly, you can use an app like MoneyThumb, which was my secret tool for many, many years. When you only have access to a PDF statement, you would use an app And there's several PDF convertible apps that convert a PDF to QuickBooks Online data. But you'll find that app, you'll convert that PDF into what's called a QuickBooks Online exportable file, and then you will upload that into QuickBooks Online. And again, once the data is uploaded, guess what? Step number 4 is the most important. Categorize these transactions into the 5 main accounting types. So let's quickly explore the Transactions tab. So when you go into QuickBooks Online, I'm showing you a very simple QuickBooks account here, a QuickBooks Online account. So the first thing you would do, as I shared a moment ago, is you'd go into Bank Transactions, and you can either click on here and say Link My Account. This is where you would go ahead and connect directly. See, it says Connect an Account, and you would just find that bank account and connect it, and it would all come in. Or you can click on Upload My File. So that was option number 2. And you'd upload the data into the file. And when you upload that data into the file, the most important thing is that now it becomes data inside of your file. Now, what's really important is just because it's sitting here waiting in the waiting room, says for review, it doesn't mean it's inside of QuickBooks Online yet. It's waiting for you to bring it into QuickBooks Online. So for example, if I wanted to bring in this Calendly transaction, if I agree that it is subscription and software, I can add it in, and now it's actually inside of QuickBooks Online. So for review means it's in the waiting room. See, I have 19 in the waiting room, but when I actually click on add or match, then it comes out of the waiting room and it goes into QuickBooks Online. So we don't just want to randomly just start adding and matching. We really need to understand that we agree with the account that it's going into, and then we can go ahead and click on add or match and keep going. So just for the sake of this example, I'm going to set all of these transactions because I want you to see what it looks like once everything's in there. So we're not going to worry about that. So now the transactions are in there, I'm going to show you 2 separate things. First, I'm going to go back to bank transactions and just show you that I just went ahead and entered in 19 transactions in like a second. And now I can go into my reports, which again, remember the second step after completing your tasks. So this is considered completing a task, entering in my data. So now I move over to reports. Now I move into, let's say, the profit and loss. And now I can go ahead and look at this year's worth of data, run that report, and now I have data in here. I actually just did that in a matter of seconds. So that's the power of leveraging technology. So I actually have another bonus for you where I go through all of the steps on how to do this in QuickBooks Online, and I even show you how to do this using a spreadsheet. You'll have that bonus checklist and a video at the end. So now that we've completed accounting tasks, let's go ahead and make sure that our financial statements are accurate. And that gets done under step 2, which is preparing your tax-ready financial statements. So what does that mean? It means that you're preparing the 2 key financial statements, making sure, again, that the 5 main categories have been accurately classified. I can't stress that enough. You need to know the financial literacy, which is when you are posting inside of any accounting software, it's getting posted to the general ledger, and the general ledger has 5 key accounting types. It has the 3 balance sheet account types, which are assets, liability, and equity, and it has the 2 key income statement types, which are income and expenses. So when you are actually inside of the software, for example, again, when you are here and you're in your bank transactions, you need to make sure you understand why this is going ahead and matching to a specific account, or how you can do this drop down and choose the right chart of account. You need to know why you're choosing expenses, or why you're choosing income, or maybe why you're choosing a balance sheet account. That's super important. So as long as you understand that when you are categorizing transactions, it's going to either the balance sheet or it's going to the income statement, then you know that your financials are being accurately prepared and reported. And that's when you can go into those deeper financial conversations. Remember, I said that for tax-ready books, the key is to have financial conversations year-round, to be able to look at the balance sheet year-round, to be able to look at the income statement year-round. That is the key. So again, let's go ahead and see what that would look like if we went ahead and entered transactions. So we went ahead and entered these transactions. Let's just say, for example, I'm going to match everything here, and I'm going to go to reports, and I'm going to open up my P&L. And again, I want to look at this for the full last year or this full year. So I'm going to click on this year and I'm going to start looking at this line by line. So for that example or that question, what do you mean line by line, Mariette? Well, this 7250 doesn't tell me anything. So what I'm going to have to do is open this up, drill down, again, the beauty of accounting software, and say, oh, that makes perfect sense. The only customer I have right now is Maria Garcia. So the only income I have right now is from Maria Garcia. So guess what? It makes perfect sense that this year I only have 7 grand from Maria Garcia. Or let's just say this makes no sense because I got another $10,000 from a new client and that client is not here. So again, that's the concept of now having financial reports that I can drill down on and make sure that they make sense. And then lastly, we want to report on our taxes. Now, my friends, again, this is the concept that even if you don't do taxes, this is super important. You want to be able to have your financial statements ready for taxes. So you want to learn the process of matching books to taxes, which means you have your financial reports ready to go. So you've been doing the work all year round and you have your financial reports ready to go. And now you start getting comfortable on the tax forms, because remember, that's the other part of year-end readiness is learning your tax forms. So let's explain what that looks like. So you're going to start with your income statement or profit and loss that's inside of your accounting software. If you're using QuickBooks, I just showed you how to do that. And also if you're using FreshBooks, it's also under the reports menu. Then you're going to pull up that financial statement and side by side, you're going to pull up the appropriate tax return. Yes, everyone, business owner and accounting professional, whether it's separately or together, should be able to do this process. And now that you have them side by side, all you're going to do is go line by line. So for example, income should match income on the tax return. Cost of goods match cost of goods on the tax return. Expenses should match all the expense categories on the tax return. If, for example, you do have salary and wages, let's say you do have somebody on payroll, then the only thing that should be here in wages is actual payroll, not contractor payments and not owner's pay because you're a sole proprietor, for example. Let's use the example of an S Corp. So you do the same line by line, but for example, let's say as an S Corp, you do have salaries and wages. So under your salaries and wages, you need to separate compensation of the officer, which is the officer owner, and then all other salaries and wages. So again, these are just items that you'll become aware of when you do this line by line matching approach. And then you do the same thing with the balance sheet. You'd pull up the balance sheet for the business forms 1120S, 1120, and 1065, and you'd go line by line. Again, it doesn't matter if you're not a tax professional. Every business owner needs to get accustomed with this process because you're the one that signs the 8879. You're the one that signs on the bottom line. And if you get comfortable with completing your accounting tasks, preparing your financial reports, and reporting on your taxes, guess what, my friends? You are tax ready. Now, there's one other tab that's really cool inside of QuickBooks, and that's the taxes tab. But what I'm going to do is I'm going to give you another bonus, another video bonus that you can go ahead and take a look at, where I went ahead and shared with you why I love this area so much.
All right. So, yeah, to wrap up, Mariette and I thought we would just talk about a few things here. This is all well and good, but it's pretty backward looking. And we want y'all to become forward-looking business owners, to not be in the same place next year, maybe where you're nervous about your books, you know, you're confident in your books, you're going to be able to do even bigger and better things. So we want you to stay financially organized, leverage tech, and maintain tax readiness year-round, so that your bookkeeping and business finances are a blessing and not a burden. Okay, if you have that sick feeling inside whenever you think about your bookkeeping finances and taxes, that's no fun. And so you need to quit doing a lot of this, maybe some of the, you know, the I keep thinking of the word varsity, the junior varsity stuff, and start acting like a varsity or, you know, professional NFL player when it comes to your business finances. You know, quit chasing credit card points and opening a bunch of credit cards. That's just complicating things. keep things simple. Be more strategic about how you're categorizing your expenses so that way they mean something to you. None of y'all are being audited by the SEC, right? Like your business books are for you as long as they're not breaking the law. So make your categories meaningful. You need to review your expenses every year so you can cut the fluff. I think that's a very varsity move. It's really easy if you've been in business a while for your expenses to kind of become just bloated. All those automatic charges that are happening, start to analyze them. That's why we want you to be financially organized year round, y'all. If you're not using a modern bank, some of y'all chimed in about the glitchiness of your bank. Fix that. That's leveraging tech. I use a bank called Relay. I put a lot of clients on Relay. I don't have any problems. So these are things that you're going to be thinking about. When we talk about year round, we want you to make a date with yourself every week, maybe every 2 weeks, whatever your business needs. But you're going to put it on your calendar, and for 30 minutes, you're going to do your books. And for many of you listening to this call, 30 minutes a week is probably all you need. But if you don't do 30 minutes a week, then it's going to just explode into way more time than it would have taken because you waited till the end of the year. So a lot of people in my FreshBooks office hours group just use that time as an accountability time. Some of the weeks they don't have any questions at all, but if they do, they have me to be able to answer them. But it's also just a valuable time, like date on their calendar to do their books. Okay, so we also want you to set and implement your next level business goals and actionable plan, so that your business can be a business that you love and that can bring you joy instead of killing you slowly every day. If you do all the things that we taught today, y'all, the numbers are not going to lie, and the truth will set you free, right? If you know the truth, if you're the truth of your business numbers, you can make informed decisions based on accurate information. And that's what these concepts are all about. Some of you have been flying blind. Now with tax ready books, you're not going to be flying blind anymore. And then one thing I did want to address is consider when it's time to bring in help and grow your business to execute the strategy that works best for you. So not all of you are going to want to hire, but if you do, I get a lot of questions about like how to know when's the right time to hire and how to prepare for that. And that might be something you want to do in 2025. And so I get this question a lot. And one of the ways I want to help you think about it is perhaps setting a goal for yourself to have a certain amount of cash. And I don't know what it's going to be. Maybe it's 3 months of a person's salary. Maybe it's 6 months of a person's salary. I think you do need a cushion. It will greatly alleviate your the stress and anxiety you have about making that higher, because it is stressful. But let's just say it was like this, you're going to pay someone $5,000 a month. And so you want to have 6 months of their salary saved up. So that's 30 grand. Maybe you've never had 30 grand in your business savings account. So that would be a goal for 2025, right? Get there. And you can't just hit 30 grand. You need to maintain it because there's a lot of shenanigans we can do to try to elevate our cash, but when we secretly know it's going to kind of disappear pretty quickly. So I like having this idea of a fake zero, I call it, where instead of having $0 in your bank account, meaning you're overdrawn, you're going to have 30 grand in this example as your overdrawn amount. And if you go below that amount, you're going to act like your hair's on fire. You're going to act like you would if your bank account was actually overdrawn. And that could be a signal to you. Are you able to maintain the discipline? Is your business able to maintain the cash flow to where you're not dipping below that line? And that would, again, greatly reduce your anxiety about making that higher. That's just an example of one way to approach thinking about how to hire someone, keeping that, see if you can be disciplined enough to maintain a certain amount of cash in your business and not dip below that. And you'll know you're doing that by constantly keeping your books up to date. And then remember, you're not alone. We are on this business journey together. We're going to elevate our businesses and communities. Mariette and I are both here. We're so glad that y'all came. I don't know. Do you have anything else to add at this point, Mariette?
No, I love that. Yes. I mean, I'll just say Kate was so excited about this whole thing, but she's like, let's make sure that they elevate with everything they learn. So thank you for wanting to add this additional area here because I agree. I think it's when you're tax ready, when you're ready to be next level or up level, whatever way you want to say, your 2.0 version of your next business. Like we need to be thinking about these next elevation steps. So thank you so much. I love it. So let's go ahead and just end today's session with one of my favorite quotes here. Until next time, let's remember with what he actually is one of my favorite mentors. So I got to meet Scott Cook when I was on the Intuit Accountant Council. I got to meet him as well because he spoke at my twin brother's Harvard graduation. And so he's a big mentor of mine. He was the founder of Intuit. And he says this: technology is just a catalyst at times for fundamentals already present. Now, I really get chills when I say that because I truly believe that the fundamentals is what matters. It's what Kate and I brought to you today. It's what we really want you to know. It's the literacy, it's the process, it's the workflows. But then when you partner that with technology, that's the catalyst to you moving to the next level. It's what Kate and I know collaboratively want for all of you. And it's really what our goal was for all of you in today's session. So thank you all for being part of this Master Your Books community event, and we will all see you in the next one. Bye, everyone.